Okay, now we will have a group of panelists to discuss a panel about the blockchain application, innovation, risk, and security. So we will have 5 speakers, including Managing Partner of Block Collective, Alexander Blum. Welcome, Alexander. So Alexander has been working in blockchain, advising VCs, PE groups, Fortune 500s, and blockchain startups on financial and technical strategy and development. So let's welcome Alexander. Welcome. Our second speaker will be the founder at Michael Williamson. So let's welcome Michael Williamson. Michael has been 19 years financial service experience, over 21,000 followers on LinkedIn.com. And Michael just started his own consulting firm. Welcome. Our next speaker will be the president and senior blockchain technology consultant, Golden Ratio Software Service, Rajeev Aggarwal. Welcome. Rajeev is a researcher, hands-on developer, and designer who is passionate about the creative new solutions and to the existing problems and exploring the greenfield opportunities using the blockchain. Welcome. And our next speaker will be the CEO of Ideation Incorporated, Douglas Graham. Welcome. So he's the CEO and chairman of the $8.7 billion bank with 17 funds, managing director at KPMG focusing on the financial service security. And he worked with most majority regulator. Welcome, Douglas. And finally, we have managing partner at AEGEUS Risk Consulting, Case Olivia Downer. Welcome. So, Case has executive experiences in financial service, have worked in senior role at JP Chase, Citigroup, and American Express.
So you guys just missed your really warm introductions and overview of what you guys do. Just so you know, we have about 40 minutes, so we'll talk for about 30 to 35, and then leave the last bit for questions from y'all. So, they just kind of gave a general description of what y'all do, but if you want to just go one by one and speak a bit more about, in your own words, what you're up to, that'd be great.
Sure. Good afternoon. Good morning. My name is Keith Downer. I've been involved in the blockchain ICO world from about 2016, where I did an internal project with one of the larger consulting firms with the trading houses, trying to look at a pilot as how you would do trade clears through that system, choosing the infrastructure, what that's going to look like, and how we would implement that. I think they have now gone ahead and implemented that pilot into production, so they're beginning to adopt some of that capability. And since then, I've been helping different ICOs and different companies that are involved in the blockchain space for either utility or trading type coins for use. Prior to that, I have about 27 years in the industry. I was the chief of risk technology at JP Chase, reporting to CRO, as well as head of enterprise risk management at Citi. I worked at American Express. I've got tenure in the Caribbean. I've done stuff in Asia, a lot of work in Singapore. I'm a Columbia grad, and my undergraduate is in computer science and mathematics.
Hi, good morning. My name is Rajeev Aggarwal, and I have been involved with the blockchain for around 2 years now. I am an engineer by education, so my interest in blockchain is the technology part and how it can make a difference, what kind of solutions it can create. I have been working on hands-on development on Ethereum, Stellar, Ripple, looking inside the code and developing smart contracts and developing solutions creating the design and architecture. Currently, I'm working on Hyperledger Fabric. That is what has taken my interest, and I see that for enterprise level, that is one of a very, very good and chosen platform, mainly because of permission nature that directly vibes with the enterprise solution compared to the permissionless networks. So my interest in blockchain is from the technology perspective, is less from crypto side. So crypto just becomes a part of it, but as such, I am currently looking at the security aspects of the blockchain in enterprise solutions.
Excellent. My name's Michael Williamson. I've been in blockchain since 2015. Been a consultant for now about a year and a half. Prior to that, I was working for a crypto exchange based out in London, where I did my MBA at Cass Business School. That's kind of where I went ahead and discovered blockchain for the most part. I'm also the co-founder of some of the Hyperledger meetup groups in South Florida, where I actually have some of my co-founders right back there. So basically, I have about 20 years worth of financial service experience. Used to be a financial advisor and also insurance related.
Hi, I'm Douglas Graham. I was managing director at KPMG, and then I ran an $8.5 billion bank. It actually turned out to be a troubled bank for about 5-6 years through 4 different owners. Two involvements with blockchain. First, we were building a national cryptocurrency for central banks. We modified the Bitcoin code so that it was effectively re-centralized, so that it was one compromise, so that central banks would be involved and interested. Currently, we're actually working on a blockchain-based system for allowing organizations to handle, manage, track, protect their intellectual property, and to also trade that intellectual property, particularly trade secrets. And we're using what I think will become a very interesting intersection of technologies, something called fully homomorphic encryption, which is encryption which, even when it's encrypted, you can still search for keywords, combined with the blockchain. I think there's going to be a lot of opportunity coming from that.
Great. And just a bit about myself, I am the managing partner of about 20-person consulting group and also invest in the blockchain space. Been involved since about 2013. Prior to that, I was working on software-defined radio base stations and was at MIT. So yeah, our topic is to do with risk, security, and innovation, which are broad topics. I think it's great to have kind of a blend between financial and technical, and even a bit of kind of government-related experience. I think it's important with those words to be aware that there's multiple definitions and multiple ways of framing them depending upon technology, financial stuff, both government, social aspects as well. And so just want to be mindful of that as we're thinking about the interconnection between them. So I thought I'd start just another way to get to know the panelists is have some quick questions where you guys can just answer basically yes or no, or very short answers. So let's see. Just one at a time. We'll start over on that side. Basically, it's one or the other. Will the emergence of blockchain technology be less, more, or equally as transformative as the emergence of the internet?
More.
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 All right. Next one is buying Bitcoin today a good long-term investment? And these are not professional investment advice. Just yes or no?
No.
No. Maybe.
Yes.
And then the last question is, do you think blockchain technology will disrupt our current macroeconomic and social political structures or further reinforce them?
Completely disrupt.
It will disrupt definitely, but it will also enforce from unforeseen corners, which as of now are not needed, mainly because...
Short answers here.
Mainly because at present we have most of the businesses, we have a centralized authority that is handling the trust aspect. And governments are not involved in that because there is a centralized trust authority. But once you take that off, and it becomes a sort of chaotic situation, at that time, government would have be stepping more into it to have some kind of control. So you might actually see much more bigger, that invisible hand of Big Brother than less what you would expect from blockchain. That's what I think.
Okay. You guys disrupt or enforce?
Disrupt.
It hopefully will replace our current flawed democracy with a much more systematic issue-based voting.
Okay, so let's get into the deeper discussion here. One thing I noticed about blockchain is that kind of the pace of innovation, the way that it's growing is incredibly rapid. And so I wondered, how do you guys understand what's driving this trend and the velocity of it? And maybe you want to get started?
I'm sorry, repeat the question so I can make sure.
What's driving the rapid velocity of innovation in the blockchain space?
Well, I think, if you think about it, 10 years ago or so, blockchain in general was created 2 months after the Lehman Brothers collapse, for the most part, right? It's probably about the worst part of the worst timing for most people. People are being laid off from work and different things of that nature. And so I think what happens is that people are now being forced to be self-employed. And I think this is an easy route to kind of avoid the VC firms basically taking such a large percentage of your company. And it's an easier route to go ahead and raise money. And it's something that's new and exciting to get into. So I think a lot of people will have the opportunity to get into this field because it is new. It's a field that you can attempt to become an expert at, to a certain extent, and help lead in your own way and apply it in different ways.
I think when you look at what has happened on the internet, who would have thought that the largest retail businesses in the world, Alibaba and Amazon, would be internet-based? Look what's happening to the brick and mortar companies today. I think blockchain is going to do more than that. It's not just the VC firms. The banks are going to have an issue. With the issuance of coins and currencies, we are now talking central bank currency and clearing currencies. You've got global currencies that can be implemented. There's a lot of stuff that is going to move us towards globalization, which opens up another can of worms that we need to think about from a risk perspective. But the point is, the capability will allow for better transparency and much, 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 much easier movement of stuff, so that more people can get involved in this, that more people will be involved in trading, more people will be involved in being able to make money through that source. So I think in the long run, a lot of things that we do today will be done differently. We're talking about voting, we're talking about currencies, we're talking about the fact that IBM is trying to figure out where Ebola and other things, outbreaks that get caused from a supply chain perspective. So if you look across all of the elements, healthcare, everything is going to get some significant disruption. Life is going to look a lot different, I think, with the implementation of blockchain.
I think the key word is decentralized. Because it's decentralized, it means we're able to take out the intermediaries, people who had an agency position and use that as a position of power to take out basic rent-seeking activity from whatever it is, any industry. They no longer can hold on to that position because it is decentralized.
Yeah, and my views are not so overarching. They are based on the projects that I am handling and I have handled. And it's interesting that from industry's perspective, what I feel, what is driving is not necessarily that industries can actually foresee that, yes, that's going to be wonderful technology and it is really going to be helpful. In fact, most of the businesses, one of the main worry is ROI. They do not necessarily see it. And so that is holding back their investment, the efforts, what they can do. And what is actually driving them still is FOMO. That is what is driving, in practical sense, in my view, many industries. And what they're trying to do is looking at the momentum, what they see around. What they are trying to do is be in the position of being in the driver's seat as the adoption takes place, rather than the following. So, even though the keyword is decentralized, what I am seeing is that a lot of blockchain implementation which are being tried out, they are not so decentralized per se, but yes, decentralized in fact. And their choice of decentralization is not that they want to choose to be when they're starting the project. It is they're finding there are no other options for their businesses to be future-proof. So they're trying to create the permissioned blockchains, which have quite some control on many levels. But yes, at the same time, they have the options to expand and to be integrated with the decentralized systems as they take place. And I think the key factor becomes for them is FOMO.
Interesting. I was with my good friend last night who's a C-level executive at a publicly traded company and was saying something similar where these companies can't find the way to monetize the blockchain, yet it seems like everyone else has to do it, right? And so I think she was saying they're still waiting for those kind of examples. That makes sense. So I think the next question I had was thinking about the immutable aspects of a blockchain, or at least the way most of them function today, both financially and technically. How does that change how we should be thinking about security? Any first takers here?
Security isn't a huge problem. Yes, we've had thefts from exchanges, often probably internal thefts, self-thefts. But the blockchain itself hasn't been compromised. It's using basic cryptography that's been with us for many years. And we know you cannot compromise it without a few acres of supercomputers, such as the NSA uses. So, apart from massive government agencies, it's secure. Obviously, you then have to secure your private key, and there's plenty of ways to do that. The security problem is solved. You wouldn't think so from reading the paper, but the technology exists to secure your systems. Combinations of software-defined perimeter, never broken, to protect data in motion. FHE, fully homomorphic encryption, which protects the data at rest and allows it to still be useful, because with normal encryption, you have to decrypt it every time you want to use it. So that's the vulnerability. And then to protect against the malicious insiders, you have to have user behavior analytics. So those three things together, SDP, FHE, and user behavior analytics, means you can protect it. So security is cured, solved.
So I'm going to look at security in a different aspect, more or less from a business aspect itself. So during the financial crisis, there's tons of homes that were being foreclosed upon. Some probably didn't deserve to have their home foreclosed upon because the banks just simply didn't own the note. A lot of loans go ahead and get transferred in loan servicing, bought and sold on a daily basis, consistently. So there's the security aspect of the node itself that sits on a blockchain in general, that if a bank were to go ahead and use it, that file with those documents can go ahead and be transferred to a loan servicer properly. So when somebody needs a loan modification, or when someone needs to go ahead and refinance their mortgage, the bank knows exactly who owns it, different things of that nature. And what happens is that when the bank in general messes up or loses those documents, that's cost. That's cost to the bank, which means everyone else's mortgage cost to purchase a home goes up as well. So that's my view.
Yeah, I look at security that there are layers of security issues. And yes, I agree with the previous perspective that on certain level we have the technology available, and we have levels of encryptions, various authentication mechanism that takes care of certain aspects of security. But there are two kinds of networks, permissioned and permissionless, and they both have their own kind of security requirement because they are solving sort of different problems and different industries they are handling. Now, if we come to permissionless, there, of course, the wallet and your key security is one aspect. The other aspect is the smart contracts, security of smart contract itself. With smart contracts being in the control of the whole process of value transfer, So that becomes the most vulnerable place on any permissionless network. And there have been cases, there are many recent cases, that how those vulnerabilities have been exploited by hackers, where either they have siphoned off the money, or they have made the whole smart contract completely unusable. So as a result, the whole business can actually be bankrupt or can disappear. I mean, everybody knows about what happened with Parity smart contract, the multi-signature wallet contract.
I bet you not everybody knows. If you maybe want to say a bit about it.
Yeah, so so that is permissionless. Yeah. Now the other is the permission networks. There the security comes is of the way those networks are working is if your identity is completely verified, then they provide you a lot of access. So their identity management becomes the critical aspect. And for example, in Hyperledger Fabric, they use the certification authority, so the certificates. So handling those user permissions, their access roles, that becomes the most critical aspect. And so those have their own requirement where just the technology of encryption is not sufficient enough. And cyber security, which is a major threat, and the blockchain is supposed to make it better. It is supposed to help with that, with the decentralized servers. But then at the same time, it introduces its own issues as well. And the way I see the trend-wise, the NIST standards, the blockchain would be looking to implement some tailored version of them as well. And that itself is a pretty large set of security issues which are being handled. So there are multiple layers of security. And I think based on your use cases and the particular platform you choose, you have to handle that.
You want to just maybe quickly, not everybody probably knows, if you can just quickly summarize with Parity what happened there?
Oh, sure. Yeah, so with Parity, last year, Parity had created a multi-signature wallet. And what happened there was that the hackers, they exploited its one of the main features. What they did is they exploited a function through which they could destroy the wallet itself. So in the smart contracts, there is a functionality which can basically kill itself. And so once you do that, then it is completely inaccessible. And once it's inaccessible, then the funds that it was holding, those are completely unusable. And now they are trying, and you know that there's a big kind of war going on in the Ethereum alliance to solve it. So yes, that's a major issue, and that is just one major issue which we read about. But you see that more and more we use these smart contracts as legal contracts, the more issues are coming, and there are companies that are handling, and there are some companies who are trying to handle that's their business. So you might have heard about Hosho. They are actually trying to handle the smart contract vulnerability issues, and they are providing actually very good 360-degree audit of a smart contract, which will be required. And you need to do penetration testing. You need to check, does it do exactly what it is supposed to do, nothing more, nothing less? So all sort of things are there. And there are many other companies. I mean, I can list and list, but the point is, there is a reason they are there, because smart contract is the vulnerable part, the permissionless blockchain.
And just in that Parity example, at the time I think it was around over $200 million that is still inaccessible at this time.
There you go.
Just back to the question about security.
Well, there's a lot that's been said, so I wouldn't say too much more about it other than to say three things. One, the technologies do exist today to help to solve some of the problems. I think the challenge we have is the application of those technologies appropriately. So to the first comment, they're all there, right? They're not just all implemented appropriately across the blockchain networks, and I think we need to do a better job of that. Two, we just need to recognize that security would always be an issue, because there will always be people who are trying to break into it. So people get smarter by the day, they get smarter, and they will try new things. So how do we figure that out, and how do we manage to do that is the third piece. And I think the last comment I'll make on that is, at the end of the day, it's a balance between revenues and expenses. So if you can't get an ROI on it, there's only X amount of dollars that companies will spend to protect what they have. And so there will always be some firms that will leave avenues open just because they don't want to spend the extra dollar to get that done. That can create potential loopholes in the broader network over time. So those are just some things we need to consider as we move that forward, because there's a lot out there today that is available.
Gotcha. I'll just go back to you since you didn't get to say much. In terms of risk, which I think also has many definitions, I mean, I think about risk sort of as our inability to access certain information or know what certain aspects of whatever you're analyzing are going to affect. And so, how should we be framing our understanding of risk within blockchain, maybe both technically and financially, when there's so many unknowns and everything's kind of on the frontier here?
Well, there are lots of areas of this that we need to think about. So I will only cover a few. I'll let the rest of the panel speak to it. But for people investing, they really need to think about who is involved, what they're investing in. And so as an investor into ICOs, blockchain capabilities, cryptocurrencies, do your homework. It's a simple answer. There are tools to help you with that. As an owner, as somebody who's issuing an ICO, there's several things you need to consider as well, and we can help you with that. From an operational blockchain perspective, the humans involved, the management of keys, are still a major area that people need to think about, and there's a lot of money being lost in that space. Keys have been used to usurp $500 million in losses plus so far. So at the end of the day, it's still an issue. Even though we just said the technology is available to manage some of this stuff, it's not implemented appropriately where it needs to be, so you need to think about that and think about that very, very carefully. And then the last comment I'll make on risk management is more from a management and banking business perspective. If you set up a business, you need to have capital to cover you on the downside. And how do you measure that, and how do you think about that across the enterprise is very important as you launch some of these larger, more important blockchain infrastructure networks. In healthcare, it's going to be a major, major problem. We need to think about it. People's records, what they're being used for, how they influence elections, all of that stuff. We really need to think through that and figure out what that looks like. I don't think it's a Facebook issue. It's a bigger issue than that. And we really want to make sure that we are taking into consideration the fact that if we're taking out the third-party agencies who are doing the verification that made a lot of money doing this in the long run, I didn't say they did a good job or a bad job. I'm just saying we're removing them. We kind of need to make sure that we have a way of providing the checks and balances to ensure the integrity of everything that is going on in the network. I just think that there are lots of elements of risk management that need to be applied, and we need to think them through carefully from the different angles, depending on if it's financial or non-financial, and what the operational impacts of those would be.
I think when you look at risks, there's probably three elements. There's the cybersecurity risk we've talked about a little bit, and we can come back to. If you're looking at cryptocurrencies, of course, there's the price risk. And that's a manageable risk. We know what it is. We know it's more volatile, but we know under modern portfolio theory, it makes sense to hedge your risk in other assets a little bit by having a completely uncorrelated asset class. So, that is actually a means of risk reduction. And then there's a risk in the data, and particularly when you look at the blockchain, you're thinking about it is a record-keeping system, and it actually is de-risking record-keeping systems. Example is, I was involved in a real estate transaction in Nicaragua that turned out to be a little contested, and the counterparty, it turned out, had gone into the title registry and just simply torn the page out. Obviously, the advantage of the blockchain is that it's massively redundant. You can't tear out the page. And that alone opens up an enormous amount of opportunity because, De Soto, the economist, said, it's giving people clear title is how you bring them out of poverty. And you can have these very inexpensive title registries now, which don't require a lot of money to go into. So I think those three elements of risk we're taking out. As we said before, the cybersecurity risk can be removed, and there's actually no reason why it isn't removed. The technology is publicly available, has been demonstrated to be effective in 5 major hackathons. I think, I don't know in a way why we still talk about it.
So yeah, so Factum is actually a company that deals with, for instance, real estate and title work. And I also agree, don't give some random person on Telegram that claims to be the administrator money to some random address. That's probably a bad thing. You have to do your due diligence and at least pick up the phone and attempt to call them and figure it out. The other aspect too is, in my view at least, of course risk is different for every person, right? But I view risk as in financial services and this ICOs and STOs and everything else. I kind of view altcoins as they've peaked. It's done for the most part. It's pretty much well peaked. When you have 1,000 people buy an ICO, and maybe it's $30 million, it's not much liquidity. And I mean, you're basically trading with a group of people that is maybe 3 times the size of this audience, tops. So I believe the new trend will be from ICOs to STOs, because security tokens is pretty much well the place to be. I mean, every ICO in general, if you touch bases here in the US, it's pretty much well going to be security. And anything to do with regulations, I mean, regulation risk is huge. I also say, in general, between liquidity and regulations, those are going to be huge risk right there. Because if you think about it, if you're trying to go ahead and make money, I mean, most of this stuff before was only pretty much well offered to private equity firms. Private equity firms would normally hold it 5 to 7 years, et cetera, et cetera. People right now are trying to go ahead and trade and make a lot of money off of 1,000 people, and it's just not happening. One last trend too is that I agree also with regards to Hyperledger. So I think Hyperledger is going kind of a bit of a secret for a lot of people right now. But I think that in about 1 year to 2 years from now, you're going to hear a lot more of it. You're going to see not just altcoins and all this other stuff, that product that sits on top of a blockchain. There are so many more operational things that go along with a blockchain that people aren't talking about right now because they're working on projects right now. I mean, the Bitcoin and cryptocurrencies, that's just basically hype. I mean, people made a lot of money, and that's fantastic for them. But right now, this is transformational for businesses.
And I completely agree with that. In fact,
Use your microphone.
Yeah, I completely agree with that. And as you mentioned about Hyperledger, the projects that industries are working on, they are actually clearly indicating that we do not want a crypto on that note, because that is not what we are trying to do. We are trying to streamline our process, business process, with decentralized solutions so that we have eventually we have better participation and partly de-risking as everyone is participating on equal footing, and they are looking for it to help resolve the disputes of the information that happens when the or big organizations are working on larger scale to make it much smaller period in which they can resolve the dispute, because there is a ledger on which everyone has already agreed upon. And so those are the problems they're trying to solve. So it is not just necessarily crypto, and I do believe that in a few years more and more people will see that it is not just crypto. And I think most of the aspects of securities, they are mentioned here. One part which was not mentioned much, that was due diligence KYC. And KYC, it affects especially the crypto world businesses, and it is becoming more and more important. They are actually liable, legally liable, that any address to which value is transferred, either received or sent, it has to be completely KYC'd. And there are some blockchains which have this facility inbuilt. And I mean, if you have heard of Stellar, Stellar gives an inbuilt mechanism for compliance control, where actually on the blockchain level it provides you hooks which you can then code as per your requirement. And every value transfer, if you do want, you can actually put your gatekeeper that can actually perform the KYC for any new address, and it can do periodic KYCs. But as we do more and more businesses using blockchain solution, either in permission network or permissionless, KYC is going to be the key, because at the end of it, as you see, we are removing the central authority that used to handle the identity management part of the participants. We are removing that authority, so the system has to have inbuilt KYC for every participant.
Sense. It strikes me for all you guys speaking that we're referring to, oh, we need to do this, or what we have to happen is this. This word "we," when, who's this "we"? And it's a question of governance. There's multiple different approaches, and no one's in charge, and no one can turn anything off. I guess the market gets to decide how it turns out, but also certain things, if they're broken, if everyone's genetic data is on a blockchain, someone can access that, you can't just turn that off or reverse that. And so there are major implications, and though I think you guys are all great guys, I don't think everybody in this industry is just trying to save the world, So I think this governance feature is going to be increasingly both boring to most people and very, very important. So we have about, I think, 8 minutes left or so. I just want to open up for any questions from the audience. So maybe walk around and hand on the microphone.
So I have one question for Keith, and for the first question, so I saw that you said there's like there are a lot of different companies which are trying to solve these problems which are in blockchain, for example, the healthcare and the distribution of smart contracts and the problems with security of smart contracts, as Rajeev was talking about. So there's there are a couple of big companies, and one of them is the Key, which is actually built on a Neo platform, which is kind of the same tool, and another one is Civic, which does the verification through anonymous. You don't have to give your ID card or and QuantStamp, which audits smart contracts. So what do you think of transitioning the blockchain into cryptocurrencies and having a use of cryptocurrencies along with the use of blockchain, while not trying to compete against each other and saying cryptocurrencies are bad for the,
So I'm not saying cryptocurrencies are bad, but I am saying on the blockchain infrastructure, we have to have the verification identity stuff properly embedded into it, right? Mm-hmm. So some people are embedding that in the infrastructure, some people are putting it as an application, and I would challenge that we need some biotechnology on that. The Apple phone today uses a face feature to turn it on and turn it off. Mm-hmm. Tomorrow, why can't we just do that? And then I would get rid of the problem of people giving the keys to him, and you guys go do something completely different with it, right? Mm-hmm. So if I put biotechnology with some of the capabilities that were mentioned earlier today, I know exactly who the person is that logged in, and I can find you, right? Today, I can't do that, because today I can take the keys and give it to him, and he can leave and have a drink and then do what he wants to do. And the key should have been in my possession, and I could say that I don't have it. So I'm not going from blockchain to cryptocurrencies. I'm saying on the infrastructure itself, we can add different layers. I did a presentation a couple of weeks ago on AML, KYC, and fraud. And if you look at those things from a verification and validation perspective, as long as we're on the blockchain infrastructure, there's a lot of management of things we can do with people and personnel on that infrastructure. And to the point made very early, we can eradicate a lot of things. I wouldn't say completely eliminate, but we can eradicate a lot of things that have occurred in the past and could potentially occur in the future. Now you can add currencies on top of it. And now you can do things with currencies. You've got 1,900 currencies issued out there today. They're not going to all survive. You have risk exposure for trading between currencies. You've got exposure to try to figure out which currencies from a valuation perspective are valued appropriately or not valued appropriately. These are decisions you have to make. This is a different type of risk. This is a different conversation we need to have in that space. But the trading of currencies, the FX interchange, today people do it every day. You buy Mexican pesos because the US dollar is strong, up or down. You buy pounds, you buy euros. It's a business. People do it as a full-time business. I expect that would happen in the cryptocurrency space as well, right? And that exposes you for what I call exchange risk capability that you would need to manage. But if I know him on the blockchain, and I know specifically that I'm selling it to him, and I know who he is, and he knows that it's me selling, and we've got that taken care of, now we have a business that we can actually do some of this stuff.
So a closing question to that is, so since Civic is one of them, and they try to basically do identification, verification, KYC tool, using the anonymous decentralized platform, having their own smart contracts, and they're like presenting something called, you can buy liquor in the Consensus New York conference without using identity, just anonymous verification. So would you prefer a cryptocurrency doing the same thing, or would you prefer a company which has no link to cryptocurrency but trying to do the same smart contract, like, solving the same problem?
So I'm going to be politically correct and say it depends on what I'm buying and selling.
Okay.
Okay? Correctly, there are certain things in life you have to identify yourself to get them. I need to know who you are. There's other stuff that people want to buy that they don't want you to know who's buying it. That's a completely different business. Those are two different business models, and the business models are used for different purposes. You can't use what I call the completely anonymous in the real business world, because at the end of the day, I need to know who John is, who Tom is, and who Barry is, because I'm giving them real estate.
Okay.
For example, as the example used earlier.
Thank you.
Maybe one or two more questions about that guy in the back. Either speak really loudly or.
Can you please share your view on asset-backed tokens, so basically the tokenization of that instruments? So basically my question is, can you please share your view on asset-backed tokens, basically tokenization of debt instruments? So how the default or foreclosure will be handled on the blockchain? Thank you.
I was particularly interested in asset-backed cryptocurrency. There was a initiative going to be launched by someone out of Texas that happened to be a gold trader and had fairly large reserves of gold, so that was going to be a gold-backed cryptocurrency. We're actually looking at one that's backed by intellectual property. So I think that'll be the next trend, to have real assets behind it, because we can't get along much further with just the trust in mathematics.
So I would comment and say that the asset-backed currencies, I think, will probably have a longer life. I know there's one out of Israel that's backed by diamonds. There are a couple of gold ones available today. There's one I'm working on with a group that is trying to back it with entertainment contract stuff, right? Songs and stuff like that. So I think that having something tangible behind those currencies will provide them with more longevity and an easier way of evaluating the valuation of them and figuring out how you can trade them, right? So I think that there's a life for the asset-backed cryptocurrencies.
Yes, I'll just add one more point on that. It's definitely it's one of the great usage, and it's happening. And one more fact that is helping it is there are products, there are services that are coming where you can transfer assets from one platform to another, even though you do not have the complete blockchain interoperability between the platforms, but those services are helping you to do that. And that immediately expands how many assets can be covered, because different platforms may be suitable for different kind of assets. And if I can securitize my asset on one platform, but I can transfer the value to another platform to do some more transactions, that immediately extends my scope and the usage. So I see it very positive. Yeah.
So I see basically asset-backed securities or asset-backed cryptocurrencies, however you want to see it, as basically supporting what I was saying a little bit earlier, which is things are going to move into the direction of security tokens rather than utility tokens in that aspect, at least in my own view. Thank you.
Maybe one more quick question from that woman right there. About 2 or 3 minutes.
Yeah, I just have a very basic question. So for the internet, internet is not the information itself, it's the protocol, the discovery of the information. However, for the blockchain, blockchain is the transaction themselves. So the transactions are living on blockchain. So how do we solve the explosion problem? The internet, we can have an information explosion, but the internet is okay. But for the blockchain, if we apply that to the corporate enterprise world, and the transaction will have so many numbers of transactions, and then there will be explosion of the transactions. So how can we solve that? How can we deal with that?
I can handle part of it, and then you guys can take over. One of the part is that for a corporate-based solution, for enterprise solution, what's happening is even though we look at one blockchain channel, which is spread, which is implemented for the whole enterprise or multiple enterprises, but it is not just one. It has multiple private channels are also along with that surviving. So what's happening is the information, the data, what we are talking about, the transaction storage, it is not just in one ledger. It is in one main ledger where mostly the hash is available, and the details of the transactions may be on the side chains, on private channels. In Hyperledger world, we call that private channels, whereas on permissionless networks, those are the side chains. So one of the ways to solve that is to distribute the volume, and then you project your usage, and you see how much data you are going to accumulate on each channel in a year, in 2 years, and then you can have your mechanism to prune the older data which may not be necessarily required. And again, it's all based on use cases. So of course, like in Ethereum currently, the size is too large, but that is just one use case. The real business use cases are quite different, and for every use case, there is a different solution available.
One other wants to answer, and then we wrap it up here.
I'll make a short comment. In 2000, I don't think most of the businesses knew how they were going to use the internet. What was it going to be used for? How were we going to use it? What was going to be involved? You might have been too young to be around to recognize that. Today, we're testing a lot of stuff on blockchain. And there's more going on behind the scenes than is publicly available. So I'll close by saying one of the large banks in the United States, the CEO, who is a very, very, very respected individual, came out and had a lot of things to say about cryptocurrencies specifically. Yet they're investing over $30 million on blockchain capabilities to run the bank. So I'll close by saying there's a lot happening to make this a reality. And I think that I can talk to you offline, but there's lots of ways of solving the question that you asked. The real question is, what is it going to look like? And everyone is thinking about it from a completely different perspective, but it is transforming what you see as the norm today. Thank you.
So great, thanks to all of our speakers. I'm sure they'll be around if you want to speak with them more one-on-one, and have a good rest of your day.
Thank you, everyone.